Hi traders, Nick here. Looking at Roku. I don't trade that stock a lot. I definitely was not in it yesterday. Reported earnings. Wall Street hated what they saw. So what now? Let me back up a little bit. The short-term reaction to earnings is always a binary event, regardless of how good or how bad the earnings are. So if somebody gave us the P&Ls for Roku, we couldn't have guessed up or down. Maybe we could have gotten a hint, but it's never a sure thing. So there's always an element of gambling overnight. Okay, so yesterday I was asked about Roku, and I shared two scenarios, this one and that one. And this one is coming into play here almost perfectly. So what do I do now? Is it a catch the knife situation or what? So first of all, the macro. The macro looks okay. You know, we have three egos that could ruin it for us, but so far so good. And I think cooler heads will prevail. We're talking about President Trump, Fed Chairman Powell, which will come into play today, and the Chinese President Xi. So these guys are duking it out, and we suffer, the investors suffer the consequences with regards to headlines on how stock markets move. All right, so going back to Roku, within that, Roku is an old company. It's it's been around for a long time. It's been I think they said it's some sort of a cord-cutting alternative, but it hasn't come to fruition yet. I don't think they even make a profit. So from that perspective, there's an old saying that if it was going to rain, it'd be cloudy by now. So if they haven't figured it out, yep, they still don't have a profit. So if they haven't figured it out by now, what's going on? There's something fundamentally wrong. You know, it's like a restaurant. Sometimes it's in a nice neighborhood. Maybe it's just a block it's on. It doesn't succeed. Great food, great ambiance. It doesn't succeed. It fails. Something is amiss fundamentally. So I'm not that excited about it. Let's put it that way. From a buyout perspective, sure, but I don't like to invest just hoping for a buyout. So technically, then I go back to looking at the technicals and see, is this a good place to catch? Okay, in theory, maybe, because that was the neckline from which they broke out, right? So if whoever duked it out back then, they're going to fight for it again. So right here, we had some sort of a consolidation period. In fact, I did note it with this squeeze here, and there were two scenarios, and boy, did this one pan out. And then here they are, several steps below, and coming back into the same zone, right? So in theory, this zone is support level 1. That's the good news. The bad news is that it's starting to look like an inverse cup and handle, and that's not good. So if you think of this like an igloo, what do you call that, a ladybug. So if they lose this area, to me it's not a hard line in the sand. The theoretical fall could bring it back to this zone right here, and I'll zoom out to show you why this zone. Technically, I think if a technical analyst comes here, they'll draw a better picture. They'll probably grab the tip of that, and they'll tell you, the neckline is where this idiot, meaning me, did not post it, but the spirit is there. This neckline zone, if it fails, there's a lot at stake, and it should be as big as this. To me, maybe the ultimate is as big as this, but there are resting points in between, one of which is this one right here, that one right here, and then this stomach. So that's the ultimate risk to me, 33, 36. I'm not calling for it, so don't badger me about it. I'm just saying that's the risk of catching a falling knife. So let me see, is this a 1 year? Okay, this is a 1 year. So you can see it's not that crazy. Just a year ago, it was here. And that is about where I had drawn 36-ish. So that should be a good solid footing. And this whole zone, that's the point of control. So this whole zone should be support. So yes, technically I could catch the falling knife, but you can see, the technicals look like they were solid, pivot point here, but then they let go in a similar pattern, inverse cup and handle, or even head and shoulder ish. The neckline is not quite right there, but you can see, they tested a pivot zone neckline, and then they failed, and then here we are lower when there's even room on that. So the loss of that neckline is about this much, so it's still in play, one can argue. meaning that, yes, I could catch this falling knife, but I better know the downside risk, and I just told you what it is. Now here, something happened where the street said on this earnings report, oh my gosh, we had it nailed so badly wrong that we need to step up and play. So if these two candles were not liars, then this support zone, in fact, I can extend this, and it'll be perfect to what we're talking about right here. I think I can do it this way. Yep. Maybe 290. That's close enough. So that would be the zone I would watch, or I would expect as a loss. So if I'm buying the shares here, I better be ready for this scenario if it comes. There are other scenarios in between. I pointed them out. But this is probably the ultimate resolution to the technicals if they unfold the way we showed. So this will be market dependent. So if the market falls 3%, 4%, 5% in the next few days, and it could because yesterday we had a mega spike, you think this will hold? I doubt it. 44 is probably in the books should that happen in the macro. So this will be the first level of pain. And this will be a good support zone, in my opinion, because it was a neckline, it was heavily traded, it's a point of control. So it's a spot where I'm comfortable. So let's put it this way. If I'm selling puts, this is an aggressive place I'd sell it, but it has a viable chance of success. This is a longer term, comfortable place to own it if I wanted to sell the puts. So selling puts meaning I commit to buying the shares at that level. This is kind of going long the stock without any money out of pocket. But you can't just sell puts and hope for the best, because you may be put the stock. I'm put the stock all the time. But I'm okay when I sell the put and I'm able to own the shares. Otherwise, I don't sell the put. I sell a put spread where there's a finite amount of money I can lose and I don't have to buy the shares. All right, enough talk. Roku, is this a good knife catch? I don't know fundamentally. It depends on the individual investor, but I'm telling you technically it could, but I showed you the downside risks, and there are several. And it's also market dependent, and we're going into a Fed decision, so pick your spots. Nick signing out. If you have any questions, you can email me at sellspreads@gmail.com, sellspreads@gmail.com, or message me.